Hi, how's it going today, guys? We are looking at the Aussie. No, we're looking at the Euro AUD pair. So, for the past 5 months, this pair has been bouncing off of my 50% Fibonacci line on 1.65. So, pretty much to explain this, I separated the market into 1,000 pips, and then from that 1,000 pips, I separated it further into 250 pips. So therefore, I get 50% with 0% being 1.60. It's going to be the same for all the pairs that I show you. We are bouncing off of the 1.65. Uh, Over the past couple of weeks, this has been a very contentious zone. Sometimes we have come up here, we have bounced directly off and gone straight down. Sometimes we have actually held this line. But the one thing that we have not done is had a close above it, and I'm not really considering these two closes just because. From this was a very weak close as the next week we went directly below it. So if we actually look at this off of a monthly time frame, uh, that should not even count as a close above the line. And yeah, we didn't really close above that line. So what I'm looking for now is this price to actually come down to somewhere near this area. Let's go to a smaller time frame. We can actually see that uh, we're pretty much in a range bound downward momentum move. Looking at the IV rank right now, let's see, let's zoom out to get it accurate. IV rank is kind of muted. It's not up just because of the volatility that we're seeing back here. It's going to take a lot to actually average out to this volatility. So what we're seeing is really a muted volatility, but we have this range bound system to where when we get up here, we start to see that we have low volatility, but once we start to come down a little bit, we do have volatility actually rise. And I believe that's what we're going into right now, or lower. So looking at a smaller time frame. Oh, yeah. Matter of fact, before we go down to that smaller time frame, I want you to pay attention. This green line is the one standard deviation, and you can see that we're really averaging price around this one standard deviation. And with price being above this one standard deviation right now, with that one standard deviation pointing down, it lets us know there is some value to be sold up here. Now, going down to a smaller time frame, this is where we bring in our extra Fibonacci lines. This is all based upon the quarters theory. So even though we do have, even though this is the Fibonacci's, I pretty much made it out to be in line with a certain number of pips. So we're just coming off of that 100% Fibonacci at the 1.65 area. We see that we had a rejection at the 1.10 area, which is going to be directly 25 pips above it. Now, following the system that I use, this says that this is a complete fail of trying to close above this area. So when that happens, the next thing I look for is for prices to actually visit 1.625 area and figure out, are we going to close either right here at the 1.627, or are we going to close at the 1.622 area? Both of those have very much importance. If we do see a rejection of closing below the 1.625 area, we'll see another move upwards. But if we do get into closing below the 1.6223 area, then we can expect further weakness until we hit the negative 30% area, or 75 pips into the 1.625 area. Uh, Looking back, we can see that prices weren't able to stay below this area. So it'll be a nice area to actually expect some bullish pressure to come in. As you can see, I am in a trade. I am down on that trade, but I expect to hold this trade for a couple of more weeks as it progresses downwards.